For decades, one system helped keep the United States at the center of the global economy. It gave Washington enormous financial influence, helped fund massive government spending, and ensured global demand for the US dollar. But now, cracks are appearing in that foundation. Gulf allies are exploring alternatives. China is expanding its financial reach, and Canada is quietly posting trade gains few analysts saw coming. Some experts warn that more than $2 trillion tied to Gulf investments could become a major source of instability if confidence continues to weaken. Your roadmap to the latest in auto. Welcome to Highway Herald. Today, we're examining how shifting energy markets, rising geopolitical tensions, and changing trade alliances could reshape global manufacturing, commodity markets, and even the future of the automotive industry. Petrodollar under fire. Gulf allies start looking elsewhere. For more than 50 years, the petrodollar system helped cement America's position at the center of the global economy. Following a landmark agreement with Saudi Arabia in the 1970s, most international oil transactions were conducted in US dollars, creating constant worldwide demand for American currency and government debt. In return, Washington provided security support to key Gulf partners. But growing instability across the Middle East is placing new strain on that arrangement. Concerns surrounding vital shipping routes, such as the Strait of Hormuz, combined with the United Arab Emirates' decision to leave OPEC, have raised questions about the future of dollar-based oil trade. Reports that Gulf producers may consider alternative settlement currencies have increased concerns throughout financial markets and added fresh uncertainty to global energy pricing. But as confidence in the dollar faces new pressure, China is moving quickly to expand its financial influence worldwide. China makes its move, building a rival financial system. China is moving aggressively to strengthen its role in international trade and finance. Through major agreements spanning energy, logistics, industrial development, and investment, Beijing continues building deeper economic partnerships across resource-rich regions. Nations including Iran and India have increasingly explored transactions outside traditional dollar channels, while global commodity producers have expanded the use of alternative settlement arrangements. At the same time, central banks worldwide have been increasing gold reserves at the fastest pace seen in decades, seeking greater diversification amid geopolitical uncertainty. For the automotive sector, these developments carry major significance. China already plays a dominant role in battery production, rare earth processing, and critical mineral refining. If its influence over commodity pricing and payment networks continues to expand, it could gain even greater leverage over the future direction of vehicle manufacturing and global transportation technology. Yet China isn't the only country benefiting from these shifts. Canada is quietly emerging as one of the biggest winners. Canada strikes gold. Exports surge beyond US markets. As uncertainty grows across global energy and financial markets, Canada is quietly becoming one of the biggest beneficiaries of the changing landscape. Recent trade figures surprised economists after Canada posted a strong trade surplus, fueled by surging exports of energy, gold, metals, and critical minerals. Even more significant, the share of Canadian exports destined for the United States fell to a historic low, highlighting a major shift toward market diversification. Energy shipments through the Trans Mountain Pipeline are reaching more Asian buyers, while LNG exports and aluminum sales to Europe continue expanding. Canada's vast reserves of lithium, nickel, cobalt, uranium, and rare earth elements are also attracting global attention. For a world increasingly focused on energy security and supply chain resilience, Canada's resource wealth is becoming a major competitive advantage. But Canada's growing importance doesn't stop with commodities. It could reshape the future of vehicle manufacturing itself. Before we continue, we'd appreciate it if you could subscribe to Highway Herald. Your support fuels our passion to create more content like this. Now, let's see why automakers are paying very close attention to these changes. Automakers caught off guard: costs, minerals, and chaos. The automotive sector sits directly at the intersection of energy markets, commodity prices, trade policy, and geopolitics. Every vehicle depends on stable supplies of steel, aluminum, semiconductors, fuel, electricity, and battery materials. When disruptions affect any of those inputs, manufacturers feel the impact immediately. Rising oil prices increase transportation and production costs, while competition for lithium, cobalt, nickel, and rare earth minerals intensifies as EV adoption accelerates. Canada's expanding role as a supplier of energy and critical minerals could reshape future North American manufacturing strategies. Major investments in resource development, infrastructure, and industrial capacity are already underway. For automakers, planning factories and supply chains years in advance, geopolitical stability now carries nearly as much importance as engineering innovation, product development, and consumer demand forecasting. Together, these trends may be signaling a much larger shift in the global balance of economic power. The endgame emerges. Who wins the new economic order? What we are witnessing appears to be more than a temporary trade dispute or short-term energy shock. Structural changes are emerging across reserve currencies, commodity markets, industrial supply chains, and global investment flows. The traditional systems that shaped international commerce for decades are facing growing pressure as countries diversify trading relationships and secure access to strategic resources. Canada is strengthening its position as a reliable supplier of energy, minerals, and industrial materials, while China continues expanding its influence across manufacturing and finance. Meanwhile, the United States faces the challenge of maintaining economic leadership amid increasing global competition. For the automotive industry, the outcome will influence everything from vehicle pricing and battery production to manufacturing locations and future investment decisions. The companies that adapt fastest may become the next generation of industry leaders. Now we'd like to hear from you. Do you believe the petrodollar system is entering a long-term decline or simply adapting to new global realities? Can Canada become one of the most important resource and manufacturing hubs for the future automotive industry? Which automakers are best positioned to thrive as supply chains, trade routes, and energy markets continue to evolve? Share your thoughts, predictions, and experiences in the comments below. We always enjoy hearing perspectives from fellow enthusiasts and industry followers. If you enjoyed this analysis, be sure to subscribe to Highway Herald and turn on notifications so you never miss our latest vehicle updates, automotive industry developments, and in-depth market coverage. Thank you for watching. You can now check out any of the videos on the screen. There's more exciting and informative content waiting for you.